Hello everyone, I'm Paul.
And I'm Blake.
And welcome back to the Knowledge Real Estate channel.
Today we've got a fantastic topic to dive into, especially in this time of rising interest rates. Today we will look at the pros and cons and the process of assuming a seller's loan. This is a hidden gem in the world of real estate that can help you secure better terms, lower your interest rate, and maybe reduce your monthly payments when buying a home. First things first, what does it mean to assume a seller's loan? Well, it's essentially when a home buyer takes over the existing mortgage of the seller. This can be a great option, especially when interest rates are on the rise. Keep in mind, government loans such as USDA, FHA, and VA loans are typically assumable, but only when certain criteria are met, and buyers must still qualify for the mortgage to assume it.
Why should you consider assuming a seller's mortgage? Let's talk about the benefits. 1. Lower interest rates. Sellers may have secured a mortgage at a lower interest rate, which would be significantly better than the current market rates. 2. Lower monthly payments. With a lower interest rate, your monthly mortgage payments will be reduced, making home ownership even more affordable. 3. Minimal closing costs. Assumption typically involves fewer closing costs compared to getting a new mortgage. This can save you a considerable amount of money. And 4. Faster closing. Assuming a loan can lead to a quicker closing process since you're bypassing the time-consuming steps of applying for a new mortgage.
Assuming a seller's loan might sound great, but how exactly do you do it? Here's a step-by-step guide. 1. Negotiate with the seller. First, discuss the possibility of assuming their loan. The seller's consent is absolutely crucial for this process. 2. Contact the lender. Reach out to the lender servicing the existing loan to check if the loan is assumable. Some loans are not assumable, and you'll need to find this out. 3. Qualify. You'll need to qualify for the loan just like you would for any other mortgage. The lender will assess your creditworthiness and financial stability. 4. Assumption agreement. Work with a real estate attorney to draft an assumption agreement. This document outlines the terms of the assumption and is signed by both parties. 5. Lender approval. Submit the assumption agreement to the lender for their approval. They will evaluate your financial situation and decide whether to approve the assumption. And lastly, 6. Close the deal. Once the lender gives the green light, it's time to close the deal. You'll pay an agreed upon fees and assume the existing mortgage.
But while assuming a seller's loan can be a fantastic opportunity, there are some potential challenges. 1. Credit requirements. The lender may have strict credit requirements and you'll need to meet them to qualify for the assumption. 2. The due on sale clause. Some mortgages have a due on sale clause that allows the lender to call the entire loan due when ownership changes. Check the terms of the existing loan. And 3. Seller's equity. Ensure the seller's equity, the difference between the home's value and the loan balance, is manageable, as you might need to cover the difference in a cash or negotiate with the seller.
In conclusion, assuming a seller's loan can be a game changer when buying a home. It can lead to better terms, lower interest rates, and reduced monthly payments, all of which can make your dream of homeownership more affordable. Just remember, negotiate with the seller, work closely with a real estate attorney, and carefully consider the terms and challenges involved in this process.
Thank you for joining us today on the Knowledge Real Estate channel. If you found this video helpful, don't forget to hit the like button, subscribe, and ring the notification bell to stay updated on our latest real estate tips and tricks. And as always, if you have any questions or topics you'd like us to cover in the future videos, please feel free to reach out and leave a comment below. Until next time, happy house hunting!